Welcome back to the Springs Radio Real Estate Show. It's Cheryl Garlock with Colorado Front Range Properties. I'm so glad you could tune in to us here today. My guest is Lisa Hernandez with Bear Creek Mortgage. Welcome to the show, Lisa.
Thank you, Cheryl. How are you?
I am just outstanding.
Outstanding.
You know, I was just talking about utilizing the services of experts, okay? And I got to give you guys an illustration of why this is so important. Because, you know, our market has been improving for some time here now. And we're sort of stabilizing. It's not really a buyer's market. It's not really a super hot seller's market in Colorado Springs. It's more of a balanced market here. But I did just visit with a client who actually had her home on the market with another agent here, and apparently what they failed to do was to price that property right from the get-go because it went to an expired listing status.
Wow.
So and there was really no reason for that, but she was way overpriced. And what happened is unfortunately that seller let the agent go ahead and just tell her the price without any description of comps, thoroughly investigating what the market really was doing in her little neck of the woods. Plus, she was not used to selling in that particular price range. So she had overpriced the property by at least $100,000.
Oh my goodness!
Yeah,
that's huge.
That was huge.
That's
and it
complete disservice.
Total
it's
disservice.
Completely misleading to the sellers.
Absolutely, and it grows stale on the market. And then you know what the typical thing is buyers will say, "Well, how long has it been on the market?
Why was it on the market for so long?"
Right. Well, they were just way off the beaten path. So you need to be able to know how to explain that, but you need to know how to get the right pricing from the get-go that will attract multiple offers.
Exactly.
You know, that's really what you're looking for. So, you know, I know, Lisa, that you just attended this great conference here. And tell me some of the things that you learned from this conference, if you would, please.
Well, as we were discussing earlier, I forget the gentleman's name, Mr. Young. I can't think of his name.
Yeah, Lawrence Young.
Lawrence
from
Young.
the National Association of Realtors. He's the leading economic forecaster.
He was absolutely phenomenal, Cheryl.
Yeah.
So told us a whole bunch of information as far as a realtor standpoint. Roughly over 1 million members in real estate, so which is really exciting. So realtors out there talking about the economic forecast, and there was a panel of them talking about the forecast in the future. They're still saying it's still going to be a very good growth for next year. They're averaging 5%, so which is still excellent.
That's excellent.
It's not down. It's
not
up.
It's up.
It is up, so it's very exciting. So across the country. Conversely, rates are going to be going up. They are anticipating between this five-panel, between 5.5% to 6% by the end of next year. So definitely, if people were on the fence or are on the fence, you want to get into something now because you know what you can qualify now for and the value of your house now for compared to next year is going to be substantially less.
You know, I have to address that too because that is really a critical factor. People often do not understand what it really means to go from a 0.5 point to 1 point.
Yes.
And it is significant in your monthly pay, in which you have to pay. And so in a short sense, I mean, you can end up by waiting, get this, by waiting to buy a home, you can end up costing yourself more in the next year for the same exact home.
Yes.
Not only at a higher price, that's really the least of your worries. It's the interest rate that is really the catastrophic figure. That interest rate alone can make your payments increase by depending on what it is you're buying, $200 to $300 more per month.
Correct. So compared to buying now at the lower price end compared to that 5% increase next year as well. So there's numerous factors that are involved with if you're on the fence, you better do it now. So
now you do something kind of interesting, I think, when you counsel with people. You do give them some sort of an estimate of some sort of a cost analysis about how much it's going to cost them to finance or to buy a home and how much money. You know, tell us a little bit about how that works.
Well, so much of what I do is not just saying, okay, this is cut and dry, here it is, here's your rate. I have a different approach, whereas I try to give people as many options as possible. You know, you sometimes, depending on your situation, you might want to pay more up front, compared to paying less in the interest rate down the road. So I try to give people quite a few different cost analysis depending on their needs, and I try to ask the right questions. How long are you going to stay there? How much do you think we could get working with a realtor? How much can we get from closing costs from the seller to help buy down the rate and so forth? So there's a whole bunch of factors in on it. I am by far not cookie cutter.
That is true. Let me tell you something about Lisa, you guys. I got to tell you something. This lady has loads of experience. Now, there's a little hidden secret here. And one of the reasons I like working with Lisa so much is because she actually used to be in the wholesale market.
Right.
And so she knows how to teach the loan programs to the lenders and has much experience about that. That means that she's had to really learn the ins and the outs of the loan programs, what you can do, what you can't do, instead of just a cookie cutter, as she might say, the approach on it. Now, they've got this new work back program, back to work.
FHA
program?
Back to Work, yes. No, it's a wonderful program. So geared for people who did have a certain circumstance, a period of time that they were in economic default. So
right.
Basically, if we can prove 20% or less, say if they were laid off and say they had a job and lost their job for a period of time, obviously went into economic default, foreclosure. Those type of things will be forgiven if we can show this proof of economic default.
Now go back to the
perfect before and perfect after. So it has to be just during this time.
Okay, now go back to the 20% here. Okay. Clarify what the 20%.
20% of your income.
Oh, so you had to lose like 20%
of your income loss.
More than 20% or less than 20%?
More than 20%.
More than 20% of your income loss.
Right.
Which a lot of people did.
If you had a $50,000 a year job and went to zero, that's 100%.
That's exactly right. You lost your job.
So, and a lot of people were just even taking any job just to survive. So that's what we're looking for, is that economic event that occurred, and we're willing to forgive it. So that is phenomenal.
That is so great. Now you guys have to understand, FHA is a great. Are they doing the same thing with VA loans?
VA, we can get away with a lot more on more of a 1 year. So,
okay.
So it's sometimes even better. So theirs is extenuating circumstances, case by case.
Okay,
so it's even better.
I got to tell you something. You need to give us a call, 719-321-7600, and Lisa and I can go ahead and connect the dots for you. We can answer a lot of different questions for you. You want to put our 50 plus years of experience together to help you in your particular situation.
You're afraid to say 60.
I am, But anyway, we can, listen, you really want to go ahead and find out what we can actually do for you. And we'll give you the straight scoop. There's no hidden agenda here whatsoever. It's just a really straight scoop, because that's frankly all we know. Isn't that right, Lisa?
So true.
Okay, hey, listen, you guys have got to get your pen and paper ready here, because now we're going to have a couple of great properties to share with you on Property Showcase.